Please join me in welcoming Jack Siderholt.
Thanks, Brian, for those kind words. It's a pleasure to be here. Good morning to you all. And when First Hawaiian Bank asked me to step in and continue this tradition, I was both pleased and honored to do so. As was mentioned, I visited Maui, and by now it's been a while. I was here in May to gain a better understanding of the important economic and business features of the island. But before I turn to Maui's economy specifically, let me focus a little bit on the state's economic picture as we move into 2014. Thanks to the brightening national economic picture that Ken spoke to, Hawaii's economy has been gathering steam on its own as it moves into 2014. The years of bouncing along the bottom appear to be over for now, and 2013 will mark the year that Hawaii entered a new growth phase of the latest business cycle. Until now, the prior peak had been 2008, when real GDP for the state had reached about $60 billion. We are expecting to exceed this in 2013, actually. Not surprisingly, tourism has been the engine of growth for the Hawaii economy, the state economy. Visitor arrivals bottomed out in mid-2009 and have experienced a strong comeback since then. 2013 arrival numbers to date put us on a record pace. We expect, however, that the rate of growth will slow down somewhat in 2014 and 2015, more to the 2 to 3% range for total visitors. In the meantime, visitor spending has also been trending upward, not surprisingly, at an even stronger clip. Since 2010, visitor expenditures statewide have grown at an annual rate of nearly 13%. Notice, of course, the high degree of seasonality in this particular kind of data. And what we're seeing now is, of course, a spread to other sectors of the economy. Historically, the construction industry has been an important source of growth. However, in order to prosper, the industry requires an underlying economy that is solid, and therefore it tends to lag the economy somewhat. But even here we are seeing some signs of strength. Building permits are starting to trend upwards, and construction jobs are now more than 4,000 above their low point of 2011. As a result of this, the state construction tax base, which is one of the better indicators of the actual construction activity statewide, is once again showing consistent growth after several years of shrinkage. Now, the improved economy is also reflected in First Hawaiian Bank's business activity reports on merchants' credit and debit card activity. These are published quarterly by the bank, and as we see in this particular chart, consumer card spending continues to grow at more than 8% per year. Leading the growth in the last year has been the hotel sector, where card activity is up by 20% in the first half of 2013 compared to 2012. The labor market has also benefited from economic strength. Labor is always a lagging indicator, and so improvement in labor conditions usually start only after the economy is on a firm footing. Total state jobs are up by 34,000 since their low of 2010, and the unemployment rate has decreased to less than 5%. On a statewide level. However, job growth has not been uniform across the state's counties. This chart shows county jobs relative to starting point of 2008, and Oahu was impacted the least by the contractions in the job market and has now returned to within 3% of the peak employment at the end of 2007. The neighbor islands had more serious fall-offs in jobs, ranging for up to 12% of total jobs, and the recovery on the neighbor islands has been generally steady but slower. Among the neighbor islands, however, Maui fell the most, but has also been the fastest to recover. Now, among the beneficiaries of the improving economy has been state government, and after some dismal quarters in 2008 and 2009, general fund tax collections are once again showing steady growth, with fiscal year 2013 yielding $500 million more in revenues than the prior fiscal year. And while the state certainly has many financial challenges that it faces, its fiscal condition has not been this good in a number of years. So in sum, reflecting the national economic strength, the state has entered an economic growth phase in the business cycle, and this is certainly certain to help Maui's economy recover. So let me now turn to Maui specifically. Tourism remains Maui's key economic driver, and I'll have more to say about this in a bit. And the county has benefited from the tourism boom. Slowly, these benefits have spread from the tourism sector to other parts of the economy, including commercial construction, real estate, and most importantly, jobs. And while challenges certainly remain, the outlook for the county is positive. Consistent with other Hawaii markets, Maui visitor arrivals are trending upwards from their lows in 2008-2009, with many months seeing more than 200,000 arrivals. Through July 2013, arrivals are up by 58,000 over the same period last year. And even international arrivals, which are a small part of the Maui visitor base, are trending upwards. Yet, Maui remains highly dependent on tourism from the U.S. West and East Coasts, which account for more than 3/4 of the county's tourism. So obviously what happens on the national economy matters a great deal for Maui and Maui visitors. As Maui visitor arrivals have rebounded, monthly visitor expenditures have increased even faster. Beginning in 2010, visitors increased their spending, with some of the early recovery months showing more than 20% growth on a year-over-year basis. This has slowed to more modest but certainly more sustainable rates in 2012. And for the last months, monthly visitor spending growth has been a solid 7.3% over the prior year. Maui County tourism spending in the first half of 2013 is $42 million above the same period the prior year. Now, it's good to be reminded of how important visitors are to Maui's economy. And this chart shows annual visitor arrivals divided by population. And the greater this ratio, the more tourism dependent the economy is. In the last 20 years, this ratio has actually declined for all counties. For example, in 1990, Maui experienced more than 22 annual visitor arrivals per resident. And by 2012, this had fallen to just under 15. Yet Maui is still 3 times more tourist dependent than, for example, Oahu. So what's been happening in the tourism sector? The rebound of the last 2 years has been exceptional, but we should not assume that it will last forever. As Terrell Vencel talked with me about, the Maui Visitor Bureau is expecting about a 4 to 6% increase in arrivals for 2013. And they're working very hard to extend the Maui brand awareness to new markets, mostly focused on the U.S. Midwest and parts of Asia. To accommodate the expected growth, new capacity has been and is being added through Marriott's just completed timeshare towers. The Andaz Hotel in Wailea is just open, and the Hyatt Regency timeshare towers, which by itself will add 140 rooms in Kaanapali in late 2014. Further on the horizon, Royal Lahaina Resort has plans for a $300 million renovation pending financing and permitting. And the Sheraton Kaanapali is likewise making renovation and expansion plans. Alexander and Baldwin has plans to build an all-suites hotel on their Wailea property. Visitor-focused retailers are benefiting from positive trends. For example, Whalers Village reports that 2013 sales are up by more than 4% compared to the same period in 2012, and they anticipate doing renovations and adding 15,000 square feet of space in 2014. Air seat capacity continues to be a concern in the industry. Hawaiian added 2 daily flights to Los Angeles during the June to August peak season. And offsetting this, however, have been cutbacks by some other airlines, especially merged carriers. For example, Northwest and Delta formerly accounted for 6 flights per day, but after the merger are now down to 2 flights. Maui jobs are continuing to come back. As the effects of the tourism rebound have spread. Between 2008 and 2010-11 low point, Maui lost about 9,000 jobs. Fortunately, about 5,000 of those have returned. And because of the job growth, Maui's unemployment rate has followed the statewide unemployment rate downward since mid-2011. Unlike the other neighbor islands where the job market has lagged the statewide average, Maui's unemployment rate is now only marginally higher than the state overall. And while this is very good news, it is also certainly worth noting that the unemployment rate is still well above the 3% rate before the Great Recession. Now, in spite of the overall good news on the employment front, job creation in Maui has been uneven, with some sectors benefiting more than others. The job growth has been mostly in tourism and related services. But as the job market continues to improve, businesses are increasingly concerned about the ability to staff their vacancies. Maui Economic Development Board is hard at work providing appropriate training programs, especially focused on sciences and technology. Traditionally, one way to gauge the strength of the economy has been through the consumption of electricity. When the economy is strong, electricity usage is up. However, due to the market penetration of residential and commercial PV, as well as demand management programs, it's harder to infer economic activity from MECO's sales. This chart shows that electricity sales dropped from 2008 through the present, even though the number of customers that MECO has not declined. Evidence for this is shown in this particular chart, where the market penetration of net energy metering associated with PV installations is shown. In the last few years, the use of these systems has expanded enormously. A significant amount of MECO's power is now coming from renewable resources that currently supply 20% of sales, with a goal of 30% eventually. Turning now to construction on Maui, construction activity is starting to trend up from the depths plumbed after the recession. Contractors and developers seem more upbeat, but hardly jubilant. Construction jobs began picking up in early 2011, are now about 600 above their low point. But this is still more than 2,000 below the prior peak. Private building permits, which are very lumpy from month to month, as you can see here, are showing some signs of trend improvement, and this holds out hope that the industry will continue to expand into 2014. Insiders are saying that the mix of work has changed, with more emphasis or more opportunities coming in infrastructure and commercial construction, and less in residential and timeshare construction. Several infrastructure projects are helping to buoy this particular sector. The new airport access road is budgeted for $52 million from a combination of State Highways and Airports Division's money. Confirming the fact that the construction industry is not out of the woods, it appears that all 5 of the bids received on the airport side came in under budget. Also at the airport, the new centralized rental car facility is a $200 million project that will soon be underway. Rehabilitation of the main runway will begin soon as well, and that will be a $3 million project. Other airport improvements are including restrooms, the roofs, PA system, fire sprinklers, will add to about $12 million. The Lahaina Bypass Phase 3 has begun archaeological work, and the Kihei Police Station and Kihei High School will together involve more than $300 million in construction activity. As of now, commercial development appears to be leading the way on Maui. The new Safeway Center and the planned Target store will help transform Maui retailing. Target construction is expected to start in 2014, with opening in 2015. The other parts of A&B's Maui Business Park are well underway, with completion of the Ho'okele Street and the initial increment of 70 acres of fee simple commercial lots being sold. Likewise, Maui Lani is providing fee simple commercial space and developing their village center on the Mauka side of their property. And these spaces are meeting an important need for small businesses that want to own their own properties. On Maui, residential development is lagging commercial activity. The county's affordable housing and water access requirements appear to remain as obstacles to residential property development. These obstacles are more difficult to overcome for the smaller developers, thus leaving the field open for larger players. For example, at Maui Lani, sales of 150 lots at the Tradition by D.R. Horton have accelerated in 2013, and Town Island Homes is developing 200 lots at the Parkway. A&B is planning single and multifamily units at Wailea, the latter in cooperation with Armstrong Development, for sales commencing this year and construction starting next year. As we have seen, the positive economic news has begun to spread in the Maui economy via job creation and construction, and real estate is thereby benefiting as well. The Maui residential real estate market is in a recovery mode. As seen in this particular chart, sales have increased for the last 4 years for both single-family and condominium units. And if we extrapolate the current 2013 patterns for the entire year, single-family sales will approach 1,000 units and condominium sales about 1,300 units, figures that have not been seen since about 2007. Now, as the demand and supply equation has improved, island-wide real estate prices have also rebounded. While we are well below the prior price peaks, we continue to move in the right direction. Analysis by Terry Tolman at the Realtors Association of Maui shows that bank-owned and short sales for single-family homes are down from 45% in 2011 to about 25% in mid-2013. And as the inventory of distressed sales continues to decline, the market will obviously continue to strengthen. Maui County government is starting to see the effects of rebounding property market. Fiscal years 2011 and 2012 saw declines in property tax revenues in spite of some rate increases. Tax rate increases combined with less erosion of assessed values is helping to stabilize the trend for fiscal years 2013 and 2014. Moving into retailing, consumer spending depends on jobs and incomes. And as job growth has returned, so has the retail sector. One good gauge of this is Queen Ka'amanu Center, where 85% of the customers are local. They expect sales to be up 5 to 10% in 2013. A&B's Maui Mall is adding TJ Maxx, with construction expected to begin in 2014 and opening in the summer of 2015. Maui is fortunate also to have some economic drivers other than tourism that help diversify the island's economy, and it is worth looking at those individually. Sugar still lives on Maui. HCNS production has continued to increase from the low year of 2009 and is approaching the 200,000 tons per year figure that makes them feel good. According to General Manager Rick Volner, the recent increases have been due to a number of factors, including more acres planted and better yields. Yield improvements have been due to better rain, but also to better practices. The price for much of the production is known in advance through the use of forward contracts. Thus, robust 2013 revenues are actually due to prices in 2012. However, since 2013, sugar prices are down somewhat. 2014 is not expected to be as good a revenue year for HCNS, even if improving production trends continue. In addition to these market risks, the U.S. sugar industry is subject to political risks associated with the U.S. National Farm Bill and NAFTA. And apparently Mexico has increased sugar output, and this is a challenge to domestic U.S. sugar growers. This means that HCNS will remain an important but vulnerable part of Maui's economy. Turning now to the mountain, Haleakala observatories involve 9 facilities. According to the UH Institute for Astronomy, the annual budget of these facilities is $55 million, supporting 244 county-based staff. The big news on the mountain is the Advanced Technology Solar Telescope. This is a $340 million project that started in late 2012 with a 2019 completion date. Once completed, the annual operating budget will be $18 million in today's dollar values, with 35 local staff. The Research and Technology Park at Kihei complements the activities in the mountain. One of the exciting endeavors there is the Pacific Joint Information Technology Center that supports Defense Department medical readiness requirements and IT modernization. It houses more than $60 million worth of projects employing more than 60 people and has incubated 25 startups. Finally, under the leadership of Chancellor Clyde Sakamoto, Maui College has expanded beyond the traditional associate degree programs to also offering baccalaureate degrees. Student enrollment increased by 45% from 2006 and now stands at about 4,000, with 500 to 600 in bachelor's programs. Construction of the $26 million science building has been completed. Starting this summer, the old science building is being renovated to the tune of $4.5 million and will house the Daniel K. Inouye Allied Health Center for nursing, dental assistants, and dental hygiene programs. And this will also serve as a community health center servicing 8,000 patients per year in cooperation with Lutheran Medical Center. Other construction activities for Maui College include a $1 million photovoltaic project for panels over the parking lot. This is being done through a third-party power purchase agreement. So in summary, Maui's tourism boom will taper, but the tourism sector will continue to make an important contribution to Maui's growth. That growth is spreading to other sectors of the Maui economy, with improvements in the labor market benefiting retailing and real estate. Certainly, challenges remain in residential construction, but infrastructure and commercial construction are leading away in the construction sector. And I am happy to conclude that the business outlook for Maui for the next year. Thank you very much for your time, and both Ken and I will be happy to take questions at this time.